Hello and welcome. You're watching Market Meter on Money9. I'm Sakshi Batra. On this show, we get you an update of how the markets have been trading in the first half of trading session, and also to help you understand how are really experts looking at the market scenario currently, what should be the most prudent ways in which investors should approach these current markets, the sectors and the stocks that you need to focus on so that your portfolios can shine with profits. Joining in to help us understand and make the most of what the markets are looking like currently is Mr. Kranthi Bathini from Wealthmills Securities. Mr. Bathini, good afternoon. It's a pleasure to have you back with us on Money9. Thank you so much for taking out time for us. I want to begin by understanding from you your take on the markets now. 2 or 3 consecutive days of rise actually infused a lot of confidence in the markets early on that perhaps the cases are coming down and we are looking at the peaking out of COVID-19. But again, there is some kind of nervousness again creeping in. So how are you reading the scenario currently, sir?
Sakshi, at present, if we observe in the market, what we can clearly observe is there is a risk on rally. That's what we witnessed in the market. For example, if you go back for a fortnight back, there was a lot of apprehension in the market. Uh, the the second wave is so vigorous. Even in fact, to be, I was also a victim of COVID-19, and I
Yes.
just came out of the hospital. I was on oxygen support for a couple of days
Absolutely,
time.
sir. I do understand, sir, that yeah, absolutely. This was a very tough period for you, and I hope that you have recovered extremely well, and now you're looking for a healthier future ahead, sir.
Yeah. So that was the scenario 15 days back. What happened is during this time is market was little bit nervous, and the experts, everyone were expecting there was a ambiguity in the market. But within the span of 2 weeks, what we are witnessing is Nifty at 15,000 and Sensex above. Just again, we are back at above 50,000 levels. What does it mean is market, there is a combination of liquidity that is helping the market to sustain at the upper levels. That is, the liquidity is coming from the combination. It can be retail, the institutional money, and also limited amount of FII money also coming into the market. So it shows the earning recovery in Indian markets, and also there is value in certain pockets with respect to uh, the broad spectrum of stocks are concerned, sectors are concerned. So there is a risk on rally that's taking place in the market, and right now at every dip, what we are witnessing is market is bouncing back. It shows time and again Indian market is so resilient, and uh, uh, it shows the India's growth story is completely evident despite of these kind of forces that's bringing the putting the pressure on the growth story. But what we can witness is despite of these lockdowns, there is the Indian consumption story is intact. And also, I always, if you ask me a couple of years back, I was so negative on Indian pharma sector. Right now, okay, the stocks in pharma sector are different, because the one thing is when we see about when we discuss about demographics of India is concerned, India is a very young nation. When a nation is very young, you don't need more budgets on with respect to pharma is concerned. But COVID pandemic changed the entire scenario. Right now, everybody should have their health budget right now. That's what the
Yes.
scenario. So there are certain stocks which have been rallying, and there are some allied stocks which are related to pharma. So all these stocks are earnings are going to be very robust in the next coming quarters.
Absolutely, sir. And you made some very, very pertinent points that I wish to discuss even more. You did say that now it is, everybody needs to have a health budget, looking like a pandemic kind of a situation or the uncertain situations that might come at any point in time. One needs to be better prepared for that as well. On the consumption demand, like you said, that there is still resilience in the Indian market. However, I wish to understand from you because there is a kind of a mixed view out there. Now, experts are also expressing some kind of concern that because of this uncertain healthcare spend that most of us have had, at this point of time, people are now getting a little risk averse. They are actually now investing more in, like, perhaps more prone to save rather than spend in the healthcare, rather than spend on discretionary or extra savings or investments. What is your take there, sir?
Sakshi, I do agree with you, but I tend to say the market have one of the key factor right now that driving the market is the liquidity.
Yeah.
It shows there is ample uh, ammunition is with the people to invest at every dip. So probably the current pandemic have impacted some amount of discretionary spending, but non-discretionary spending is intact, and also amount of liquidity across the corner is on very much high. uh, Even the rural demand also, when the in a rural place, if there is a 2 3 couple of days lockdown, once the fourth day the lockdown is lifted, you can see the crowds coming back to purchase their essential goods and all. It is completely vigorous. It shows uh, the strong uh, base of liquidity in the economy.
Absolutely, sir. So you did say that now you are very confident of the pharma sector. You're bullish on that sector. We have spoken about it also in the past. Which other sector do you feel emerging? Right now, we are looking at the peaking out of the second wave. So after here, after this point in time, which is the other sector that you're really bullish on that investors should keep an eye out on?
Investors definitely should give importance to automobile sector. Okay, and there are many stocks. They need to do a cherry picking. Okay, it's not like it's a broad based buying. Okay, investors need to understand each and every stocks. Probably in our next show we can discuss about stock specific action with respect to auto sector is concerned, because everybody trying to prefer their personalized travel. So
Yes.
auto sector is going to have its way, and it's a long way.
Okay, understood that, sir. So let's discuss some of your stock recommendations now. First up, I want to discuss on your previous pick that you had shared with our viewers on our show, which has turned out to be an absolute star pick of yours. So congratulations on that. I'm talking about Wockhardt Pharmaceuticals. I remember you had shared it with us in the month of February. Right then, you had anticipated that this stock could be really in the limelight, and a sharp move of almost 75% from the peak levels has actually been seen on Wockhardt Pharmaceuticals. It's right now trading around 700 rupees. You had talked about the share when it was priced at around 400 rupees, and from then on we have seen numerous news flows around the vaccine kind of opportunities emerging for the pharma sector, including Wockhardt Pharmaceuticals as well. So help us understand, what is your view now? What should investors do? I'm sure all the viewers who had bet on this stock, invested in this stock back then, must be cheering this phase of return so far. What should they do right now?
Sakshi, first of all, thanks to those listeners and thanks to the viewers who invested in Wockhardt Pharma. If they are invested, congratulations to them, because the stock have witnessed a sharp rally. The main reason is simple. As we mentioned in our report, we do shared with Money9 team with you. Uh, there are certain times, decades, things will not happen, but sometimes within weeks things will happen. That's what happened with Wockhardt Pharma. If you see the long-term chart of Wockhardt Pharma, the stock was an underperformer. But the things that happened, taking place in the stock, the company had a tie-up with Oxford AstraZeneca to manufacture COVID-19 vaccine for UK. That changed the entire spectrum of the stock earning scenario. So that made us to advise to investors to have confidence in this stock. And when nobody were talking about Wockhardt Pharma, we made a call to invest around 350 to 400 levels, and that turned off well. And as you are aware, they have excess capacities in India also. The company can manufacture vaccine in India, because India is going to face acute shortage of vaccine in the coming days. So
Yeah.
many stocks which are in line to manufacture, and which are in line to have tie up with various vaccine manufacturers across the globe. They are going to have they are going to get benefited with this vaccine drive. Just remember, we are 130 crores population, and the penetration of vaccination is very extremely critical for India, and we are going to face a shortage of vaccines in the
Yeah.
coming few months.
Absolutely. Sir, and what would be your recommendation for today, sir? Any particular pick from which sector that you're picking out for the investors today?
Sakshi, today I have a very contrarian view today. I have a real
Okay.
estate company. Uh, of course, people will tend how the real estate sector is going to be bullish at this point of time. But I do believe, and I'm optimistic, in next couple of months, uh, once this second wave comes down, there will be a pent-up demand with respect to real estate stocks are concerned. So I recommend a company by name Kolte Patil because of their prominence with respect to Mumbai and Pune is concerned, and also the shift is that's taking place in their balance sheet. So I advise and advocate investors to buy Kolte Patil around 230 levels at this current level, and if the stock is offering any further dip, this is the stock to buy in real estate sector, and stock is going to uh, turn out to be a potential money spinner, potential upside with respect to the stock price is concerned next couple of quarters. So even though it's a contrarian view at this point of time, but the stock looks very attractive at this price point.
Okay. Okay, contrarian view coming in there from the real estate sector. Kolte Patel is something that is on the radar of Mr. Bathini, and he also expects about 20-25% of an upside for the next 1 year. So all the investors who are looking out for opportunities in this space can definitely look at this space as well and this particular stock as well. However, you must speak to your own financial advisor before taking a pick here. Thank you very much, Mr. Bathini, for sharing your views with us on markets as well as these stock recommendations. Hope you stay healthy and fit going forward from
Always
here
a
too.
pleasure to speak to you, Sakshi.
Thank you so much, sir. Thank you. The pleasure is all ours as well. Let's now move on to see how the markets are trading at this point in time. Of course, a range-bound trade runs early trade today, and the markets are just trying to hold above the crucial levels. However, the Sensex and the Nifty right now just trading tad below the flat line. 49,860 for the Sensex, about 41 odd points down. The Nifty 50 also in the red now, about a 0.25% of a decline there. 14,994 is the level at which the Nifty is trading at. When you talk about the Nifty Bank, that's also down about a 50 odd points. So very lackluster trade happening throughout the trading session as far as the benchmarks are concerned. What's actually pulling up the markets or outperforming is the small cap space. Clearly, it is now trading above the 23,000 level. BSE small cap, 122 points added there, 0.5% of an uptick. For the BSE mid cap also, it's trading tad bit above the flat line as well. Sectorally, how the picture is emerging, let's talk about that as well, and let's see how this space is emerging too. Now, when you see there's a clear mixed picture that we can see at this point in time for the sectors. The auto sector down about 0.4% in trade. Also, when we talk about the other sectors like say the FMCG sector, that's also down about 0.5%, including the IT. So some of those pharma, some of the defensive majors are not performing in today's trading session. The pharma sector is also absolutely flat in trade. The metals have somehow stemmed the decline that they were saying in early morning trade. There was a decline of almost 3%. That is shortened a bit, 2.15% of a decline there coming in for that one. There's a mixed trade happening in the banking space now. In the early trade, we were seeing a complete green screen for the PSU, private banks, or even the financial services sectors. But now they are falling short. Actually, there's just a divided trade between PSU banks and private banks as well. What's really performing today is the media stocks and the realty sector. That's up about 0.4% in trade as well. Looking at the picture in the top Nifty 50 gainers and the losers at this point in time. Let's see which stocks are actually finding themselves their place on the top Nifty 50 gainers. And you can clearly see that there is a division of a whole lot of sectors, one stock from each sector coming in to form this place. M&M from the auto space up about 2.18%. Pharma space is buzzing with Cipla up about 2% as well. IndusInd Bank from the banking space up 1.2%. HDFC Life from life insurance is also up. And BPCL is now inching higher after some disappointment in the previous sessions as well. 1.12% of an uptick there as well. And there could be some bit of a relief coming in from the decline in the crude oil prices seen in overnight US markets. Move on to see how the Nifty 50 laggards are placed at this point in time. Most of the metal counters are not doing well. Tata Steel, Hindalco, FMCG major Britannia down about 2.5%. ONGC not performing because it's an upstream major, 2.05% downtick there. And Coal India from the PSU basket is also down by 1.7% in trade. With that, we wrap up this edition of Market Meter for you. A whole lot of action is awaited on the other side on markets and on personal finance. So don't go anywhere and stay logged on to money9.com.